CoreWeave shares down more than 20% this week alone, and yet another example of AI anxiety gripping this market. The Wall Street Journal focusing on that company today. There's the tear. CoreWeave's staggering fall from market grace highlights AI bubble fears. So for more on where the AI trade is heading, let's welcome in Sung Cho. He is co-head of public tech investing for Goldman Sachs. Good to see you. Welcome back.
See you as well.
So I feel like this market is focused on debt, depreciation, and doubts.
That's a really good way to put it.
How do we get out of that? I mean, is that just how it's going to be for a little bit?
I think it's really important to think about where the funding is currently for the next couple of years. So if you think about the aggregate level of spend that we need probably over the next couple of years, we think it's about $700 billion to $1 trillion. And what should calm fears is that 90% of that is being funded by operating cash flows. It's really only 10% that's being funded by debt. And do you know that majority of that debt is actually going to be issued by Meta, which actually has a rating that's better than the US government, and the bonds are trading inside of US treasuries. So we're talking about CoreWeave, we're talking about Oracle, we're talking about 2 or 3% of the debt market of the entire funding picture. And so the vast majority is that the funding shape is actually in really, really good shape. It's just we're talking a little bit about the tails where there's a little bit of concern right now.
So you think that those two specifically are sort of drowning out the story that the others are trying to tell?
I don't think funding is going to be an issue going into 2026. And if you think about CoreWeave and Oracle, I think what you have to realize is that they're not facing a demand issue. There's a little bit of supply chain backup issues that they're dealing with. And so that's leading to a little bit of concern. And then there's also a little bit of this OpenAI with Google Gemini being the leading model now.
A little bit?
so OpenAI, they're a little bit more levered to OpenAI's ecosystem, right? And so you're seeing a little bit of depression from that as well.
Part of the problem is everybody's kind of levered to OpenAI's ecosystem to some extent. Right?
Certainly.
That's part of the problem. We're sitting here wondering whether they're going to be able to meet all their obligations. They of course suggest there's nothing to see here. Of course we will. Look at what we've done here and there and everywhere else. But we're nervous that if one little thing goes wrong, got a problem.
Yeah, look, think about how much sentiment has changed around the different frontier model players over the course of 2025. If you look at the beginning of 2025, Meta was considered to be the dominant model. Meta's Llama was the dominant model. 6 months later, OpenAI was viewed as the dominant frontier model, and they were able to do around that $500 billion and could take in capital from multiple different sources. And then more recently, Google is taking the lead in the eyes of investors. And obviously,
do you think that?
Yeah, totally.
You do?
Yeah.
They've taken
leapfrogged.
You mean they've leaped over OpenAI?
Yeah, from a capability perspective. That's why they've gained $1 trillion in market cap over the last 3 months. It's because of this perception that Gemini is now taking the lead. But we think that the model volatility is likely to continue to persist, right? The first AI models that are trained on Blackwells are about to hit market in Q1 of 2026. So I wouldn't necessarily write the obituary on OpenAI's leadership quite